Hi guys, okay, let's have a quick look at the markets like I said. So let's start off with BYND. So we've been following this the last couple of months, had this massive, 600% move, and now it's dumped as I said on Tuesday. So it looks as though it might want to go to around 140 first, then go back up again and then come down to fill this gap. I mean, eventually it is going to fill this professional gap. So professional gaps, they initiate a move, and retail exhaustion and high volume usually ends a move. So eventually we are going to go down to around 107, but obviously it's not going to be a straight line. If we have a look at TLRY, the first move down was a large 50% correction, then it bounced. So there's a very, very big bounce here from 100 to 160. So that in itself was a 60% move. So it's not going to go straight down, but as you can see, eventually it filled this professional gap at 35. Okay, so that's the pro gap, that's the acceleration gap, and then you got these retail exhaustion gaps up here. Now let's have a look at a few stocks that we're looking at. So we cover these stocks pretty much twice a week in the group, so if you guys want to join, you can do that. Any educational material, just follow the links in the description. So ultimately I am bullish on Apple. Like I said in my last video, we were looking for this wave too. We've got it now. It's broken out of this little symmetrical triangle, but any sort of pullback today with the Fed or with the earnings is a buyable event. I don't think it pulls back now given how it's moving, but it could easily just rally out of it and start to make its move towards all-time new highs. So give or take a pullback over the next few days. Obviously we've got the Fed tomorrow, so we just have to watch out for that. There's a 100% chance we're going to cut rates. So if we don't cut rates, or if there's something in the commentary afterwards that's bearish basically, then obviously the stock market is going to react to that. But ultimately Apple, we're looking at a move towards 340. Facebook is interesting. Facebook I like. It's quite frustrating how it's moving, but it has come back to now fill this gap. Okay, this was when I did my Nasdaq crash video, so this is still one of the greatest stock calls of all time. So here the options went up 10,000% just overnight, so 10 grand would have been 10 mil overnight. So this is the power of Elliott Wave. It tells you, or it helps you to make some kind of interpretation as to what's going on. Okay, but that is the single biggest stock drop of all time. I think 125 billion of market cap came out. The fact that Facebook has now made its way all the way back, that's a very bullish sign. Eventually we are going to fill this gap. So short term it's probably going to pull back, but that's just another 1-2. So it's 1-2, 1-2, 3, 4, 5, 3, 4, and then eventually we go to 425. So a conservative estimate is going to be 321. More bullish estimate is going to be 426. But yeah, have a look through the Nasdaq crash video from July last year. Amazon, we're looking at a move towards conservative, let's call it 3k, 3.7. let's just have that in the background, but let's call a conservative estimate 3,000. Obviously the problem is it's too expensive, so it's not going to have a lot of retail money simply because of the fact that it's too expensive, and a lot of ETFs are going to shy away from this simply because of the fact that it's too expensive. If they have a stock split or something over the next 3 to 4 years, then obviously it's going to be different, but it's still looking like it wants to eventually hit 3,000, and like I said, possibly 3,785, but let's work off 3,000. Netflix, honestly it's not making any sense to me, so I've just kind of shied away from this, to be honest. There's a count which is bullish, that's a 1, that's a 2, 3, 4, 5, and there's another count which is bearish. So if something doesn't make sense, just stay away from it. There's no need to risk money when the count isn't clear. Maybe it makes a triangle. This could all just be an A, B, C, D, E triangle that's going to last at least another 6 months or so, and then it goes up. But either way, there's too many interpretations here, so why go into Netflix when it's not clear? So stick to Apple and Facebook. Google also, it's not very clear. They've had this big move, but I mean, it does look like an inverted head and shoulders. So, you can just take that linear distance. What's that? 316. 316. So what is that? 316. Okay, yeah. So give or take 1592. So I think just to use classic chart patterns is the way to go. So 1600 on Google. Okay, obviously, much like the Nasdaq and Apple, this could just be a 1 and a 2. Now it's going to go into a massive 3, 4, 5. Okay, but like with Amazon, it's just a little bit too expensive for me to bother looking at it. But yeah, I think 1500 is a good shout, and that does look like a reaccumulation pattern. Let's have a look at AMD. So good old AMD. That's not AMD, is it? That's the Zetra DAX. So Nasdaq. Yeah, so AMD, we had a look at this a few weeks ago, if not a few months ago. So yeah, I mean, it's a complicated chart, to be honest. I mean, I'm running all that as the first part of the correction, then I'm running that as a potentially 25-year correction. I mean, 1985 to now is what, 25 years, 27 years. So WXY, that's the way I'm running AMD right now. So unless there's another count, that's just a massive WXY followed by an ABC. So our most conservative estimate is going to be to all-time new highs, 49.53. In the event of an extension, we're going to look at 70, 71.79. But a lot of interesting cause and effect there. So, and since July 15, it's been very, very bullish. So that's just something to watch. And let's have a look at Tesla. So Tesla, we've been discussing at length pretty much every week on the group. Very, very interesting chart. The long and short of it is we're going to go to 633 basically, and I've been calling this for months now that it has bottomed. And Tesla's very easy to day trade. If you can't day trade Tesla, you can't day trade anything. So it's easier than Bitcoin, futures, options, currency. You need to start off with this stock basically. If you can't day trade this, then you need to either join the group or have a look at my educational material basically. But yeah, it's basically bottomed out, so there's no point even going into the count. I did say there was going to be a correction, and there was, and now we're going to end up filling this gap. So Tesla's going to get a move on now, especially as it's the end of the month coming up tomorrow. So today and tomorrow it's going to start rallying to end up filling this gap. And like I said, this will be one of the best investments of 2019, if not, before the Dow hits 43k. So 473, but I've got it going to multi-year new highs 620, and all of this is a giant WXY, much like on AMD basically. So the impulse, you could argue, actually finished back in 14. So WXY, so it's a huge running flat, and this is now a C wave or a wave 3. Either way, we're going higher. So those of you astute enough to remember the price targets from the various investment banks, their names shall not be mentioned, but if you go back on Google, look at what the price targets were 28th of May, 3rd of June. One price target from a certain bank was actually $10. So that's your news, and we all know what the news is, or what it's designed to do. Okay, stock market. So yeah, Dow's going to go 43k, then stock market's going to take a bit of a nap, or maybe an extended nap. SPX, we're looking at a move towards basically 4209. Now short term, obviously, as I've mentioned, we've got the Fed, right? So we have to be a little bit careful here, but this is an inverted head and shoulders. It's a reaccumulation pattern. There is a trend line here which technically has not been retested, so you just connect the dots, double click. They always change this, extend right line. So if it does pull back, that's a good area for it to pull back to, okay? But there's no reason why this has to pull back, okay? That's a 1, that's a 2, and you could argue this is just a series of 1 2s, 1 2s, 1 2. So what am I talking about there? So it's a 1 2 3 4 5. This third wave has also got 5 waves. So it's 1 2 3 4 5. The wave 1 of the wave 3 of the 1, 2, 3, 4, 5 also has got 5 waves. And then the wave 1 of the wave 1 of the 3 of the 5 also has 5 waves, right? So you can see it's just waves within waves. So when I say 1, 2, 1, 2, I'm just referring to a smaller and smaller degree of the wave 3. And it could just do this sort of bullish wedgie sort of thing the whole way up towards 42k. If it doesn't do that, then we're basically looking for a pullback towards this trend line here. But you know, the market does not necessarily give everyone a chance to jump on, and obviously that would be a key resistance level that it's going to pull back to. So if it does pull back, you need to be ready, but ultimately we are going to go higher, and it's very positive for me to see the DJT confirming. Okay, so we always talk about this. DJT is a leading indicator, so I want to see bullishness here, and I believe the RUT is also starting to wake up now as well, which is also a bullish sign. Now, we've covered many of the FANG stocks. Some of them I like, some of them you just got to be a little bit careful with, like Netflix, Google, Amazon. Some of them are more clear, some of them are not so clear. Now, if we cover the Nasdaq, obviously the Nasdaq is the major index. Now, Nasdaq, I mean, ultimately it's just going to be like the Dow, isn't it? So it's going to be a 1. Well, let's just draw it. So I mean, we're going to 12,000 basically, so that's the long and short of it. Let me take off these fibs. So the long and short of it is we're going to go higher, right? So we're going towards 12,000. So 1, 2, 1, 2, 3, 4, 5, expanded flat 3 and 4, and then we're going to go to 12,000 minimum. So Nasdaq's going to go parabolic, much like it did it back in 1998, and that is the last wave 5. So everything's going to go higher, pretty much everything, and we would like to hope and expect Bitcoin to jump in and join the party once it finishes correcting, but I'm not going to allow it to correct more than September, because then it's that's not a good sign basically. Yeah, so like the SPX, if it does pull back, wait for that bounce at the 7658, maybe at the trend line, but much like the SPX, it doesn't have to pull back, and that is now the 1 and the 2 off this said wave 5 or 5 or 5 or 5 or 5. So that's going to go to 12,000, and this is now a 1 and a 2, so it could be just doing 1 2 1 2 formations the whole way up, or this could be all be a larger 1 and then it could be a 2. So ultimately stock market's going to go higher, Nasdaq's going to go higher, bonds are going to go higher, gold possibly, Bitcoin we would hope so, dollar's going to go higher, everything is going to go higher. This is exactly what we would expect with a melt up. Okay, you cannot have a large decline without a large melt up where everyone's chasing rising asset prices, and that is the exact definition of a Ponzi, where everyone's just chasing this fake market the entire way up, and that is basically the signs before something not so nice happens. And yeah, there's some divergence. So yeah, 1 2 1 2s 1 2s, or we get a larger pullback. But either way, you need to be ready for that. If it does pull back, be ready. But ultimately, we've been discussing this in the group at length since here, basically, that the stock market is going to go higher. Now, obviously, linked to that, you can go in the Qs. So the Qs, have I done the count? Yeah, I mean, I've got Qs going all the way to 305. So much like Apple, Nasdaq, I'm just repeating myself here, to be honest. If I just take off that wave, if you're ever stuck, draw lines, but make sure you use magnet mode, which is this mode here, and make sure you actually get right at the bottom of the trend line, because it makes a huge difference to draw a line like this or a line like this. So yeah, if we do get a pullback, that is a big if. We'll look for that bounce, but ultimately the stock market is going to go higher into this election season. Unlikely he'll get elected again. And then the second half of his term, that's when the stock market is going to look fairly elevated to me. Gold, yeah, I mean, to be honest, gold is it's a little bit confusing to me. I was always running gold to move down in a WXY. Technically that count is not invalidated, but if it goes above 1530 and never goes below 1530, there is a chance we could make all-time new highs. But for right now, I'm still a little bit careful with gold. 1530 is my upper limit before it moves back down, but got to be careful with gold. It could easily sell off tomorrow with the Fed, to be honest. And dollar index, I mean, we've covered this at length many times, that we're going to go higher because there's just no dollars in the world, and those banks in America who have dollars, they're not letting up. Basically, they're not allowing the liquidity to come into the system, so they're basically hoarding it. And anytime you get a situation where banks are hoarding liquidity, why would you hold dollars? Why not give dollars out to banks in Europe and corporations in Europe, etc.? Well, you must know the value of what you're holding is going to go higher. It's kind of like selling Bitcoin at 3k. Why would you sell at 3k when you know it's going to hit 20,000? So it's a very strange. It's not strange to those who understand it, but it's there's no way this is going to end well, basically. But that's why they are hoarding dollars, basically, because they know the value is going to go up, and once it gets to 109, 107, then we'll have to reassess the count. I mean, it could easily go higher, to be honest. I mean, that is a huge trend line going all the way back to 1986, so we could easily break that. I mean, we could easily go to 119. So they know the value of the dollar is going to continue to appreciate as we extend further into this final Ponzi speculative cycle. So that's why they're hoarding dollars, basically. But it's liquidity dollar issues which generally cause crashes. It's got nothing to do with subprime, nothing to do with tech bubble and this, that, and the other, or Greek this, that, and the other. It's all to do with the dollar system and how it moves around the world. So you need to basically understand that. So property, no one cares. Let's just take that off. Actually, we'll just leave it on for a laugh. But no one cares, especially as regards to the Australian or Canadian market. That's just ticking time bomb. Financials. I mean, what's JP Morgan doing? I've not even looked at this in over 6 months, but yeah, it looks as though it wants to break out to new highs. So that's bullish. What's Goldman Sachs doing? I've not had a look at this in a while. Have I got any targets? No. Wells Fargo, that was mentioned. Yeah, I would stay away from banks. Oil. Yeah, I've not really been looking at this, to be honest. It's probably forming a large triangle. It's not a very nice pattern. There's nothing very clear. Whenever something doesn't make sense, you're probably in a triangle or something. So I was running some kind of, I don't know, some kind of large couple of year triangle or WXY, much like it did here. Some of this, so from Jan 16 to Jan 17, something like this, some strange accumulation pattern. Maybe, I don't know, maybe it does. Maybe that's the other side of the triangle, or maybe the triangle's more like this. So maybe we just come all the way down here, then we go up again, then we're just going to do this for the next year or so. But there's no clear pattern here. Ultimately, we are going to get that inflationary move. And oil is going to eventually break here. But for right now, over the next, I don't know, 6 months or so, it could easily just chop around. So there's no need to even look at this because it's just a mess. So and let's see, what else can I share here? What else have we had a look at? So Tesla, AMD. Yeah, so the SMH index is interesting because, AMD and NVIDIA, I think, is also moving. So if you want to get exposure to AMD or the semiconductors, Taiwan Semiconductor, I forget the name of that company, Taiwan something. 186. Let me just find it because that chart was looking good. Taiwan Semiconductor. Yeah, I think it's TSM. I think it was looking good. Yeah, so it's just an inverted head and shoulders, isn't it? So we'll go to, I don't know, 50 something. But you can just buy the SMH, which is the ETF. So SMH looks quite clean. So you see that 1 2 3 1 2, and I was just making 1 2s 1 2s 1 2s the whole way up, and I've got it going to 186. So stock pickers market, definitely you got to know where the money is moving. But as I mentioned in my webinar a few months back, that was a very good one actually. It was on swing trading. You got to follow the money flow, and no day trader drives a Lambo, and people of high net worth, they already have Lambos. Okay, the only way to go from being broke to driving a Lambo is to swing trade, basically. So the way you want to do it is 20% day trade if you have to day trade, and 80% swing trade, which is basically anywhere from 3 days up to 6 weeks. Okay, it's very, very clear these moves last about 6 weeks. So if that's swing trading, that's day trading. Okay, and this is long-term hero investing. So I don't know anyone who does this who drives Lambo. I know many people who do this, but they already had Lambo, so it doesn't really count. When these guys try to do this, they lose 200k in a day, and when these guys try to do this, they have no patience. But the guys in the middle, the swing traders, they are the intelligent, savvy types, because they can read a chart like these guys can, and they can be agile, which you have to be. They can react very quickly, and generally they have a high concentration span, but also they understand the value of time that these guys understand, and the emotional quota that these guys have. Generally, long-term investors have got a higher emotional capacity based on what I've seen and the people I talk to. So these guys in the middle, they basically scalp off both of these, and these guys will trade anywhere up to 6 weeks. So 6 weeks. Okay, so you want to do 80% of this, 20% of this, and if you're here and you've never done this or this, you want to go to swing trading first. Okay, you're just shortening the time for your quote unquote long term investment, and then you can dabble into this. Okay, too many people go into this and they end up just blowing up accounts, and you don't want to be doing that. You want to understand the value of swing trading, okay, which is very, very useful, and I can show you that. I mean, we can just have a look at various examples here. So Tesla, generally the swing will last up to 6 weeks. I mean, what's that, May, June, July, so that was exactly 6 weeks. Netflix, 1 2 what's that, 26 December, 6 weeks will take it to mid-Feb, also 6 weeks. Okay, Bitcoin, I mean, this is obviously more than 6 weeks, but you can see the major move started in April, and 6 weeks from that would have been mid-May. So that would have got you the first set of 6 weeks, and another 6 weeks from here all the way up to here. So it's very, very clear that 6 weeks is a very good time frame to work around. So that's just something to note. You're not going to make any money leveraging 100 times. Unless you get lucky, obviously, which obviously is neither here nor there, because anyone can get lucky. Yeah, I'll wrap it up there. So yeah, careful if you're going to short this market. This market is not to be shorted until the Dow hits at least 40k.